Hey, Tim Kerley here with your Friday FAQ. Let's talk about second homes or vacation homes. First off, let me say you may know this, but when we talk about second or vacation homes or any residential occupancy other than your primary residence, then all the government loans are off the table. So FHA, VA, and USDA, those programs are only for your primary residence. So that leaves us with conventional loans through either Fannie Mae or Freddie Mac. You may also know that earlier this year, Fannie and Freddie changed some things around their financing programs for second homes and investment properties. We'll talk about investment properties in a different video, but essentially they made it more expensive. They added some additional fees to these programs to make it more expensive, unfortunately, for our buyers. In the past, with second home financing pricing, that has always been, it's always matched your primary residence. So you could get the same rate on that as what you get on a primary residence. That's not the case anymore. So just know that it's going to be more expensive. Now, this stuff is really sensitive to your credit score and the loan to value. So the higher the credit score, the more money our buyer puts down, the better the rate's going to be, the better the rate and the pricing's going to be. At least that's the way it is right now. This is an ever shifting environment. So just be aware of that. It is going to be more expensive to buy a second home these days. Okay. So a couple things you need to know that are a little bit different with second homes than they are with primary residence. Number one, it can only be a 1-unit property. You cannot buy a duplex or any multi-unit property to be used as a second home. Secondly, the maximum loan to value is 90%. So the buyer's got to have at least a 10% down payment, and 5% of that money has to come from their own funds. The rest of it can be gifts and stuff like that, but they got to have at least 5% of their own money before they get into the gift money. Location of the vacation home or second home must make sense. I get this question lots of times. If I'm buying the house, across town, can I call this my second home? Well, it has to, again, make sense. The home would need to be located in, it doesn't have to be located in a resort area, let's say, but you can't really buy the home down the street and call it your second home. It has to, again, make sense to the underwriter. Okay, I'm buying this home in this other city because I have family there and I'm going to be visiting, routinely or whatever the case may be. Or, I'm buying the home, maybe you're buying a home that's 30 minutes away, but it's on a lake, or maybe it's a mountain property. That could make sense. And you could call that a vacation or a second home. There also is a property flipping rule around this. So just be aware the seller has to have owned the property for at least 90 days. And then lastly, I want to go back to the occupancy and rental income from second homes. So can you buy a house at the beach that you're going to rent for 40 weeks out of the year and call that your second home? Yes, you can. There are no guidelines like there used to be around, how many weeks a year you have to occupy the property or anything like that. But the deal is, if you're buying a home, again, let's say at the beach that you're going to be renting out, if you're going to call it your second home or a vacation home, you can't use any of that potential income to qualify for the loan. Okay. So as long as you can qualify for the loan without any of the rental income, then you're fine. You can call it a second home, even though you're going to rent it out some. So I hope this information is helpful to you. I hope this makes sense. If you have specific questions about second homes, investment properties, or any other mortgage related questions, please feel free to reach out. I'll be glad to help. Thanks for watching. We'll see you soon.